Good evening, the 14th of November, the evening of the 14th of November. Ron Faulkner, Market Masterclass, how you doing? Bit of an eventful last week with the US election, a lot of volatility, a lot of surprises, gold getting hammered as we wouldn't have expected, Trump getting in. We've seen defensives getting sold off massively, the likes of United Utilities, Severn Trent and National Grid. We've got a few results coming up, so a couple of heavyweights reporting this week. So I'm going to look at a few charts. We've got Vodafone here, we've got Royal Mail Group, and we've also got Barrett's Development. So I'll talk you through some of the charts, and hopefully this can add a little bit to your trading. So if we look at Vodafone Group here, look at chart 1 in Vodafone Group, 10-year support. 10-year support being 208. Long-term trend is not to be sniffed at. This is a valid trend line. It's been in place for a very, very long time. Any breach of this trend line, it's a big warning signal. Basically, you got to take heed of why is it breaking down and why is it falling through. This price action has been in place since 2009. Also coupled with the long-term trend line, the support being at 208, you've also got what's known as a head and shoulders reversal pattern. The longer it takes for these patterns to form, the greater magnitude and potential they've got on the share price. So I wouldn't say it's completely formed as yet, but we've seen the left shoulder, the head, and the right shoulder there. A break of that neckline would give a downside target over a course of period of time of £1.33. So it would be massive for Vodafone if that were to complete and if it were to follow through. If we look at the second charts, the 1-year charts, we've got a nice little trading range. Lower end of the trading range, 204. It really needs to hold 204. The results are due tomorrow. If it can't hold 204, again, it's a big warning signal because of the bottom end of the recent price channel and the magnitude of that. So initially you'd say, okay, 190 because that was recent support about a year or two ago. If it holds this 204, great. It's a range trade. It's a trend channel and it's a range trade, and you can keep bobbing along in between that until it breaks either to the upside or to the downside. So with regards to the management's expectations, they should be reassuring, and they should underpin their full year estimates. Okay, but yeah. So that's Vodafone, and again, if Vodafone breaks down, that says a lot about the UK economy, that says a lot about defensive stocks, and that says, it would have implications for the FTSE 100, because like I say, they are one of the heavyweights. So now we are going to look at Barrett Developments here. Quite a simple chart. It's what's known as a double bottom recently. Okay, so we've seen it at 235, 236, trading up to 480. Okay, but the actual confirmation of the double bottom is when it broke 470. Okay, so you're seeing two price actions there at the 435, and a break above that channel gives a confirmation. Double bottom is a breakout. Now it's trading on support and resistance of 480. Decent results and decent sentiment in the house building sector should propel it up. So I'd look for a break above 480 and a hold above that, and also then a break above the downward sloping resistance there. That would not only give me an initial price target to the upside of 504, but I think if it can run that, it can actually get up to recent highs of 520. However, if it falls back down, it's going to come back down to the 435. That's where you'd initially target, and if it breaks below that, well, it's anyone's guess really, maybe down to 350. So that's what's known as a double bottom there on Barrett Developments. So they're reporting tomorrow. They reckon that their sales rates are going to be up year on year about 7 to 10%, and in the first half about 0.5 to 0.77 sales per week. Okay, so the trade rationale would be, and bear in mind there's no advice here, it's just key price levels to have a look at, and also looking at the charts for you to gain a little bit of understanding of technical analysis. You'd buy above the support and resistance of £1.80, given an initial price target of 504, and downsides again. If it broke down there, would be up to 36. So moving on to the last chart here, chart 4 of a Royal Mail Group. Been in the recent trends. This is a classic trend channel since October, halfway through September to October. So it's a 20p price channel. Buy at 480, sell at 5. Buy at 480, sell at 5. It's as simple as that. Any break above or below this trend channel again would signal a buy or a sell below those. Okay, so break below 480, you got a price target of 460. Break above 5, you've got a price target of 520. So that pretty much rounds it up. In terms of Royal Mail's forecasts from UBS of 4.3 billion sales, plus 3% year on year. Okay, so tread carefully out there. The market's very, very volatile, and like I say, with the likes of National Grid and United Utilities being sold off as much as they are, it's anyone's markets really. So my name's Ron Faulkner. This is Market Masterclass. Hopefully I've been some help. Many thanks.